It's super exciting to be a new investor in this new era of investing. If you're interested in the stock market at all and you're curious as to about how you can get started in the stock market, I'm going to talk about some of the cutting edge products that are available to new investors now that really were not available to me when I first started. And I've kind of coined this video in a way that if I was talking to myself 20 years ago when I was in my 20s and I was looking to get started, anybody can benefit from these products, but certainly if you're coming across the channel for the first time, take a few moments and hear me out on some of these products that are available now for new investors. And the amazing thing about it is a lot of these products are no cost to entry, and that is just an amazing benefit to new investors where we don't have to opt for traditional ways of entering into the stock market. Ask yourself if you truly understand all of the ways that you can become invested in the stock market. Do you think that you have to go with a fiduciary? Do you think that you have to go with a financial planner? And at the end of this video, you're going to be crystal clear on some of the cutting edge products really that are available to new investors with very little to no capital to start. You can start with as little as $100 in one of these options. And that can be really, really exciting for a new investor who just thinks that they don't have what it takes to get started in the stock market. And I'm here to tell you, it's for everybody if you just take a few moments and hear me out on some of these options. Option number one, the two accounts that we talk about all the time really do have their place right at the front of the line here to offer to new investors. And each one of these really offer some very, very specific benefits that you need to be aware of. And I'll throw Robinhood into this group of three as well, as long as you're opting to start the self-directed Roth IRA account first, which Robinhood does not carry, all right? M1 Finance and First Trade both carry those options. So when you're going to start your passive account or your active account, I'll explain that in just a sec, you need to make sure that you're entering into and starting the right account first. All right, you need to get involved with your retirement account first. I don't care if you're 18. I don't care if you come back to me and say, look, I just love Robinhood, I'm going to start it first. Let that go for a second. Make sure that you're planning for your future. Investing in the stock market is for your future. It's for down the line. If you want to play with the stock market and trade in and out of stock, that is not investing. Okay, so just keep this in mind when you're looking at the different account opportunities that you have. The first one is M1 Finance. It's a platform that I've used, and I feel like it is absolutely the best, most prudent option for a passive investor. Okay, it offers a series of pies that you can build your portfolio. There's recommended pies on there. They give automatic rebalancing on M1. And if you're a beginning investor, I always encourage you guys, if you have a little bit of starting capital started, let's say $500, which is the minimum to start the Roth IRA with M1, you can go ahead and start this passive portfolio with no cost to entry other than the minimum required amount. Now, anything after that, any of your contributed dollars, free of charge. You can buy partial shares in M1, which is one of those unheard of benefits. If we were to be talking about this 10 years ago, people would have thought you were crazy. We're not crazy anymore. It's just a new era of investing. And if you're looking to get started in the stock market, there is no better time than now than to start looking at these cutting edge products that are out there available to you for very little cost to entry. So $500 to start on the passive side of the house. My recommendation for you guys, if you're looking to start and you just want to go with the passive option first, go ahead and go with the M1 option. You're going to be able to invest your first $500 in there, keep the passive portfolio going until you reach your first $10,000 goal, and you will get there, all right? By entering into the stock market passively, you're probably taking the most prudent step towards your financial future, and you're eliminating all the noise out there that just tells you to buy stock picks all the time, all right? The passive option. The active option that we offer through the channel as well is through First Trade. First Trade is an online broker that allows free trades, very, very cutting edge products. You guys know that a lot of the major companies out there, TD Ameritrade, Merrill Edge, Charles Schwab, are starting to lower their fees, but they don't offer the cutting edge benefit of entry to the stock market via free trades. And for a lot of young folks out there that are sitting watching this video, that can be very, very attractive, and that can really be what seals the deal, honestly, and is like, okay, I'm in, I get it. I'm gonna look at these two and really educate yourself up. You don't have to do a thing. Just become educated on some of these cutting edge products, because I talk to people all the time that don't know either one of these two accounts exist. I'm here to roll those out to you guys, and if you're new to the channel, congratulations. You've just been introduced to two of the most cutting edge accounts that are available to new investors. Now, First Trade is a little bit more of a traditional design and platform. These two are very, very good. They are very different in their aesthetic appeal. We've got some folks in First Trade that like it. We've got some folks in M1 that like it, but the platform is extremely different. And I think the M1 platform is a little bit better designed for a passive investor, whereas a First Trade account is a little bit better for an active investor. All right, somebody who wants to get involved in the stock market and become a little bit more aggressive over here with some stock trading or some stock investing. If you want to build a dividend portfolio, you can do it here because it's got a little bit more of a real-time order situation where when you put in your order, it goes through right away. Whereas the M1 account has a one-day buy, which is fine for a passive investor. It doesn't matter. Furthermore, if you're going to become a passive investor, it doesn't take any research to know what type of products we're going to buy. We're going to be strategizing around our Vanguard ETF products. There's no reason to look elsewhere. You can, okay? But we're going to be building our pie in M1 based on the ETFs that are offered through Vanguard. And for a starting investor, we talk about 3 of them. Really, you don't need to be trying to redefine the investing landscape for yourself. Pay attention to what we're looking at. The Vanguard's total index, it covers the entire stock market. It holds about 3,600 holdings within the ticker symbol VTI. I've also recommended looking at the VOO, which is the S&P 500 from Vanguard, and finally the small cap index VB. That can go in conjunction with the S&P 500. So it's a good starting place to enter into your passive portfolio if you're looking to start in the stock market. Number 2, dollar cost averaging is something that we throw around all the time. It's one of those fundamental pillars of investing. Very, very important. You take set amount, you invest it into the stock market, let's say once every 2 weeks or once a month. Let's say you start with $25. In any one of these two accounts, you could start with $10. If you're a new investor out there and you're trying to prove to yourself, and you've heard through the grapevine how important investing is, it's important. I'm telling you, if I was talking to myself 20 years ago, I'd be telling myself the exact same information. And if I could start with $10 on a dollar cost average program, I would do it. Now, some of the traditional brokerage houses have entry and exit fees to their products. Neither one of these two have it. So if you wanted to just start with $25 and invest that in either M1 or First Trade, you could do that. Since First Trade offers free access to stock, you could pick up a share of stock every single month. Think about the possibilities of accumulating shares over time. M1 has the very, very specific benefit of picking up partial shares, okay? But just remember again, the recommendation that I've got to look at this more passively and this one more actively. Try to separate the two. And if you really want to go whole hog, start both. All right? Start your Roth IRA here or here, and your taxable brokerage account in the one that you left remaining, okay? Go ahead and start them both. These are the premier options for anybody starting in the stock market right now. But DCA through free incentives, you could accumulate shares of Google even as a 20-year-old. You don't need $1,000 a share. You could buy 1/10 of a share per month if you wanted. Think about how much that opens the stock market to new investors. Think about the possibility of using your free trades. This is infinite free trades. You could trade as much as you want in this particular account. And when I'm talking about trading, I'm not talking about buying and selling. I'm talking about buying and accumulating wealth over time. All free of charge, all barriers to entry for a lot of folks that are looking to get started in the stock market that are working on a budget. I get hit with this all the time. Ryan, should I buy every month or should I try to spread out the buys over the series of 3 or 4 months so my DCA can build up so I can accumulate more shares and try to minimize the impact of fees? These two accounts have no fees. You can fund your account whenever you want. You have no middleman. These are both the best options out there for self-directed options. All right, so if you're a new investor out there and you're like, man, I don't know anything about the stock market, I've just told you a very, very important part of becoming a stock investor, and that is getting off on the right foot in the right account, avoiding all fees, taking advantage of all the free incentives, and you might not understand all of it to start, but I'm bridging the gap for you. All right, and I highly encourage you guys to do your own research when it comes to the many benefits of both of these or one of these, if that's the option that you choose to take. The third thing that you're going to want to do here is choose the starting product, and I've kind of alluded to where I'm going with either choosing the passive option in M1, right, to choose the ETF that makes sense for you. If in fact you're choosing this passive option, choose the ETF that's going to give you that broad exposure to the stock market. You don't need to be an analyst to buy the S&P 500. You don't. You're diversified across all 507 companies that represent the S&P 500. By buying VOO, you're going to look to build that up and DCA that account over time, and you're going to do so, again, free of charge. If you're watching this video for the first time and you feel liberated, there's a reason why, because we're giving you guys investing in a new era, and it should be very, very exciting. The last thing about the starting product, if you're going to go with an active account here, you're kind of going against what I recommend for new investors, going passive with a nice ETF to start. The Vanguard's S&P 500 works very, very well for your entry product to the stock market. Give yourself a fighting chance to let your money fluctuate in there. Allow yourself to prove to yourself that you can pay yourself, okay? You can do all that through the ETF. But if your starting product is going to be blue chip stocks, for example, in the first trade active, you can do that as well. Make it a goal to accumulate 1 share of AT&T every single month. Make it a goal to acquire 1 share of Kraft Heinz food. And you can do that by exploiting the free incentives, and you can pick your starting products. Whatever type of investor that you are, I'm not going to sit here and tell you that you have to be passive or you have to be active. I'm both. I'm both. And I would encourage you guys to look at the pros and the cons of both, because there are pros and cons to both. You have a better chance of higher than average accumulation by being a stock market investor. It's the single greatest path to wealth in the stock market. Passive investing is giving yourself that defensive base of diversification in your portfolio that is so, so important for a new investor. Guys, thank you so much for tuning in to this Investing in a New Era. I really wanted to talk to the new investors and provide a little more clarity on the accounts that are out there, the free incentives that are in there, and what type of starting products we can kind of start the discussion on once you work through item 1 and 2, what we can actually start to fill that account with to really stand the test of time going forward and not subject your dollars to 1 single cent to fees in either one of these accounts. It's a beautiful thing. Guys, first time tuning into the channel, subscribe, help us support the message. Hit the thumbs up for me if you like the message. Leave your comments at this video, because I'd like to strike up a dialogue with any new investor that comes across this video and is interested to understand my take. Throw some ideas my way. If I've missed something in identifying these new opportunities for new investors, leave those comments at the bottom, guys. Thank you so much for tuning into the video, and good luck in your investment future.